this is part 5 in the series where I'm going to be teaching my friend Josh how to become a consistently profitable trader in the stock market. And today we're actually going to be diving into my trading playbook and going over 2 of my top trading setups. Now, if you're new to the series, the link in the description below will take you over to the full playlist. You can start on episode 1 if you would like and progress with Josh up to this point. Before we hop on inside my computer, I just want to quickly mention that I do offer a mentorship group for those out there seeking guidance and wanting to learn how to become consistently profitable traders in the stock market. You'll get access to not just a curriculum of videos covering my entire trading system, essentially everything I've learned over the past 7 years in various markets, but you'll also have access to essentially see and copy my exact trades. So anytime I'm putting on a position in the market, I will post that entry. And when I go to close that position, I will post my exit, giving you the chance to essentially mirror myself and my success or failure in the market. There's a lot more included, and the first link will be in the description below if you want to go check that out and apply. All right, with that said, you ready to go?
Let's do it.
Let's get started. So my first setup, not in any order, but just how I have them inside the masterclass, is going to be the BOP, or the break of pattern. Now, I mentioned this in last week's video, but I have setups that correlate to bullish or bearish trades. Okay, so essentially whether the market's going up or down, I can still make money. So I have a bullish setup here, a bullish setup here, a bearish setup here, and a bearish setup here. So this just allows me to be able to make money no matter what direction the market is going. So whether we have a very red year or a very green year, that does not matter. I can still trade these setups. So let's jump right into the BOP, so the breakup pattern. I went and found a chart that I think presents what I call the break of pattern. So essentially what we're going to be looking for on a chart to figure out whether that chart presents a breakup pattern or not is, first, obviously, let's identify the trend. What's the trend?
Bearish, down.
Bearish trend into the all-time low at 350. But look at this. We've seen, okay, clear, obviously, lower highs, lower highs, lower highs, lower highs, lower lows, very bearish trend. That 50-day has been acting as a resistance level. We formed that all-time low at 350, but then look at recently, over the last couple of weeks, look what has happened here to this chart.
Starting to bounce back up.
So what does a breakup pattern sound like to you?
Sounds like if the market, or not if the market, if the stock's been going down, if it's been bearish, but then all of a sudden it starts going up.
Okay, so
right? Like over the last...
We're breaking that pattern of lower highs in this case. And it is a bullish setup, like you said, which means we're betting on that stock, the direction of that stock to go up. So for example, on DDD, obviously coming off 1109, we ended up breaking below the 180-day, and then we have this 50-day trailing overhead. We started forming clear lower lows. Again, pretend nothing has happened yet up to this point, right where we are right here. Lower highs, lower low, rejections at the 50-day, lower lows, rejections at the 50-day, slightly probed that level, right? And then retraced, lower low, push into the 50-day rejection, lower low, push into the 50-day, lower high, rejection, probe that level, broke below. You can see this pattern that's been playing out. So if we want to go ahead and just draw our resistance levels, we've definitely got some resistance here. Okay, at 499, looks like we've had 2 tests on the 4-hour, again, each candle being 4 hours. And then we've got another area of resistance, which looks like we've got 1, 2, 3, 4, 5 tests at this area, 452. So that's looking good.
That's good.
What does that mean? More tests of an area?
Means stronger resistance.
Stronger resistance. Okay, good. Same as support. And then obviously we've got a little resistance here. We can see obviously coming off that low at 350. Well, what signaled, or I guess what let us know that this chart was essentially shifting its overall direction from bearish to bullish? Because that is going to be the breakup pattern at the end of the day. What we're trying to do is identify a chart where the trend has been bearish. Okay, we've seen those lower lows, lower highs. We want to see, those moving averages being respected. And then all of a sudden, the chart has reversed and shifted, and we've broken that pattern of lower highs. We've broken above those previous resistance levels, and now we're in a bullish trend. So where on this chart does it look like we broke that pattern?
Yeah, I'd say right around
broke
here.
that pattern and broke that trend, right?
Yeah, because
Okay.
it was no longer probing. Is there for what, week and a half?
Trading above the 50-day, you're saying?
Yeah, trading above the 50-day.
Okay, for a week and a half. And then where was
And
that?
then drop back down. So that was back in October.
Yeah, so this...
Late October.
Okay. And then...
But fell.
we fell, yeah, we formed a new low, or an all-time low in this case, right?
Mm-hmm.
And then this right here looks like where the direction shifted, coming off of that all-time low at 350, right?
Mm-hmm. So it bounced back up, broke the 50-day.
I would say the break...
And then broke the 180-day as well.
And then it broke that very strong level of resistance at 452. See, I'm looking at that level, that very strong level of resistance, 452, we broke.
Okay. I get it. So you're not looking at necessarily the
It depends
50-day.
on how respected the moving averages are. But, we started just trading, pretty much on the 50-day. I mean, there wasn't much respecting going on here. You can see we were just on top of that 50-day for quite some time. But
then here it bounced.
Let me show you.
4 times.
I'm going to paint this picture out better, and I'm going to give you a bunch of examples.
Okay.
So let's just do a quick summary, okay? Bearish trend, pattern, lower lows, lower highs, 50-day being respected, okay? Rejections at the 50-day acting as resistance. Started to definitely break that pattern of lower highs as we started to no longer respect the 50-day. Ended up pulling back into that low at 350. And then as you can see, we started to push off of that low. We broke above 452. And at that point, I'd be like, all right, it looks like the trend here is starting to shift. It's starting to reverse. And then you can see we finally got a nice clear break and now have traded back and broken above 499. Okay, clear break above 499. And now we're working toward our next level of resistance at 560. And I'm not drawing a trend line or anything. I just want to just visually kind of paint the picture as to like what we're looking at here. You can see this channel. Again, this is just for an example. I don't trade based off trend lines, but you can see this kind of channel we were forming or we were, trading in, and then we really just broke above that previous resistance, broke above the next level of previous resistance, obviously broke above the 50-day. The whole trend has shifted. We've gone from bullish to bearish. We've got that breakup pattern, and that would be what I call the BOP setup. And so in this case, if we entered, for example, now we would play a move back up into that 560 area. Now, again, the cleaner and clearer the chart, the easier it is going to be to identify those levels, where we're going to be right, where we're going to set our take profit, and where we're going to be wrong, where we're going to set our stop loss. I would have actually, let's say this was 2 weeks ago, looked to enter as we broke above this kind of 452 area and held. And then I would have tried to play a move back up to 499. And then at this point, now that we've broken 499, looking to play a move back up to that next level of resistance. And the optimal way to trade this breakup pattern is once you get that first break, which would have been, like I said, kind of this area
The
here.
452.
Then obviously that was at this point. We did end up slightly pulling back below. Well, then playing that next move right up into resistance. So this chart's a little choppier than I'd like, right? See these giant, 4-hour candles, a little volatile. I would stay away from this one. However, that is, an example. Let's find a little better one, I guess. So like breakup patterns will be very apparent when it's been, say, a couple weeks or months as the whole market has been trading down. And then we see, a reversal within the overall market. You're going to be looking on the individual stocks themselves, knowing that we want to look at the trend pattern moving averages. And then once we get that, I guess, buy signal, which would be a break above that previous resistance, whether that is based off the candles or based off the moving average, and we're going to be playing that essentially the break of that pattern up into another area of resistance, and that'll be our margin for profit.
Okay.
Here is an example. Ticker symbol ALK, trend, bearish, 50-day, definitely respected. Clear pattern of lower lows, lower highs, formed that all-time low at 30.75. And then, again, let's pretend that all of this is yet to happen. Okay, so that's not there. Okay, put ourselves in the mind space of this is where we're currently trading. Let's look back and identify areas of resistance. So every time we see a pullback into a push, we've got a resistance area here at 35.50. We see another pull back into a push, another area of resistance, right? Roughly at 34.84, pull back into a push, couple tests of 33.39, pull back, and then that low at 30.75. So there's two scenarios that could happen at this point. We break this low and continue trading lower, or we bounce off this low and trade back up to this 33.39. Now, when we say theoretically, if the chart was sitting at, this area around 33.24, just below resistance, two things that are going to happen. We're either going to get rejected, bounce back down, and more than likely break that low, or we're going to break above. So on the break above this area of resistance, so 33.39, as we get that breakout, right, you can call that a breakout, that would be our buy signal, right? That's where we'd look to get in and then play the move back up to this next area of resistance, because we've all of a sudden broken this pattern. Because you can see we haven't ever broken previous highs. Like, this chart has been in a very steady, strong continuation of lower highs. Not that these previous highs or these resistance areas are going to come into consideration, but we could just say there's a high, there's a high, there's a high, very just rough, right? So the second we see the bounce off of 30.75 and we start to push up toward 33.39, well, more than likely we're going to get rejected, knowing the overall trend and the pattern here, what has continued happening, time and time again over the last 4 months.
Since July.
But what we've seen now happen, obviously here, is that we were able to break above 33.39. So we wouldn't enter here right below. We would wait for a break over resistance. That is going to give us confirmation of the breakout pattern. That is the breakout pattern setup. Then taking a position, knowing let's wait a little bit to see if we hold. Obviously hold above this resistance area, take a position, and then once, you can even see here, let's just now pretend we can see all of this. Once we did break this area at 33.39, we did end up probing below. Now that's going to come when it gets to the point where we actually go about setting our stop loss and take profit. We'll talk about where we would have set that in this case. However, look at the chart. I mean, you can see we've clearly continued trading higher. And that's why I say, like, the cleaner and the clearer the chart, the better. Maybe it would have been hard to identify where we would have been wrong on this chart, because we obviously wouldn't have entered right here at 33.50 and then set our stop loss at that area. But you could also then look at the 15-day EMA and say, hey, look, we broke above the 15-day EMA, and now let's use the 15-day EMA as a level of support. There's obviously different ways you can go about setting that trade plan, where you're right, where you're wrong. But once we did break that 33.39, that was break a pattern. We continued forming higher highs, and we can see we broke 34.84, and then we broke 35.50, and now it looks like we're working our way back up to this next area of resistance. Okay, another example. So this one's a little choppy for me. Looks like no moving averages respected. We're just looking for very clean and clear charts. Here is another example, ticker symbol AAL. Obviously, this chart is not as, I would say, as great of an example as the last one, but 50-day, obviously respected. Lower lows, lower highs, bearish trend, low at 1086. Looks like we started trading up, breaking above resistance, just two smaller resistance areas. Higher highs, two higher highs after forming lower lows, and then another high. Obviously, we've got this resistance at 1275, roughly. Looks like we were rejected and then ended up pulling back. Now the 50-day went from acting as a resistance area to acting as a support area. You can see the difference here. Now we have test of the 50-day acting as a support level. Two tests of that. Obviously, rejections at 1275. At this point, I would say if we ended up trading back up to 1275, breaking above this area, we could look to play a move back up to 1301, because at that point it looks like the trend definitely would have been reversed, and we're just waiting for a break of this pattern, a break of this previous high at 1275. But not a great chart. I probably wouldn't take a trade on that one. All right, I'm going to pull up an example. So this example is from the trade ideas section with inside the mentorship group. Essentially, I know this is a bit blurry, but we can see MDT, coming off that low at 68.84. Essentially just looking to break back above 73.94. And then the next clear level of resistance being 76.56. Do you think at this point you're starting to get a good understanding of the breakup pattern? Essentially, we just want to see a shift in trend, a change in the direction of a stock. And then once we break that pattern, we're entering and playing a move up to that resistance area. It's pretty straightforward.
It seems straightforward.
All right, I'm going to have Josh go through a couple charts, try to identify. Let's just see if you can find like 2 or 3 breakup patterns.
It's not really supported though, right?
Too choppy.
Yeah. Well, right here, like before, say if we were...
Okay, here's one. Yeah, DG. All right, so it looks like we came off that low at 101.09. You can see we broke above the 180-day. Definitely broke back above the 50-day. Looks like the direction did totally shift. Kind of keeping an eye on our next level of resistance at 128.69. What would happen if we broke above 128.69? What's our next area of resistance overhead? Looks like a little resistance there at 133.88 and then 139.11. So the idea of figuring out where that resistance overhead is to give us a picture as to when we go to set up that trade plan, where's our take profit going to be set? I don't want to see a lot of tests of a resistance overhead if we're, trying to bet on the direction of that stock going up, right? The less tests of a resistance area, the better. But we want to know where is there going to be resistance that this chart is going to run into.
Yeah.
And then we could see if we want to get out there or not. So, say 133, that 80, 133.80 area roughly.
Yeah, because if there's not a lot of resistance, then
That's
ideally
good.
it keeps going up.
Exactly, yeah. And then 122, 42, we were just using this as an example. We did break that area of resistance.
Later.
There you go. Look at that one. It's a little choppier, but let's identify our levels of resistance above where we're currently trading.
That's pretty high up, though.
Yeah, that's pretty high up, right? You probably won't ever be looking to take any trade up in that area.
Okay, so this is our low.
Yeah, if you kind of want to work your way, down.
Over.
It's easier, yeah. Just very rough. Obviously, we're going to be more accurate if we actually go to take a trade on one of these charts, but just for practice, kind of draw out that general, it might be a couple cents off, but the general resistance area with our trend line.
Like, that's not really anything, right?
I mean, there'll definitely be a little area of resistance there.
Yeah, that's kind of like where it's playing right now.
And again, the same concept of the market will probe levels and then break back below. I guess the better way of saying is the market will probe a key level, a support resistance level, whether that is based off of candlesticks or based off of the moving averages, and then probe that area and then retrace or remount, right?
So you'd be looking to enter.
What would you say, a break above 52.98? Wait for a break above 52.98. Once we get that break, see if we hold that area. If it looks like we're starting to hold that area, or if it looks like we're starting to work our way up to 53.63, then we can take an entry and play.
Because then it'll broken both of these and the 180 day, correct?
Right, we got the 100. Well, is the 180 day respected? And you want to look at the whole picture here. We haven't tested it at all, so I wouldn't even
look at that.
Look at that. I mean, they're just know that inherently it is the 180 day. It will be acted as a level of resistance, but there's 0 tests of that level. So how strong of a resistance, we don't know.
Okay.
Then you kind of have to look at the margin for profit. Are you saying you'd play the move from essentially 53 to 53.63?
Yeah, but is that like enough of like a percentage for you to do that?
So here's kind of like a rule of thumb for me. I guess I use this rule of thumb to determine whether the trade is even going to be worth looking into further. So I look for a 3 to 5% margin for profit within the chart. So from where we're currently trading to that next area of, again, support resistance, is there a 3 to 5% margin? So what's our margin here?
It's like 1.
So more than likely, a 1. Well, I would even say I would wait for a break above 52.98, right?
Yeah, because it's kind of trending.
We want to see a break of that pattern. So it looks like we haven't broken this area yet, and we've been, we've just been bouncing off that kind of resistance area. So I would wait for a breakout, a break of that pattern.
Yeah, and then maybe look for how strong? Look for something around the 55, 51.
Yeah.
After you break above the 53.
Yeah, and I think keep in mind the longer you start trying to see a trade there, more than likely there's just not a trade. Like
so you're saying like ideally you would just see like the
it would
if
be
it's
very
obvious
apparent to you.
it's the best.
If it's obvious, it's the best, and if it's
If you're searching for it,
yeah.
it's not worth it.
Yeah, exactly. Let's find one more example of the breakup pattern. And the breakup pattern, I've only traded, I think, once this year. I've taken one trade, I'm not kidding, on a chart that presents a breakup pattern. Last year, I took way more. It's one of those setups this year that I just haven't traded. But it still should be in your playbook. Now, this is going to be part of your homework. I'm going to have you go through as many charts as you possibly can, and not only try to identify charts that present the breakup pattern setup, but also the other 3 setups that we're going to get to.
Okay.
All right.
So is this a chart you would even look at?
Okay, let's see.
It's respected
The 50.
a number of times.
There's no, you don't even really count
number.
it. You could just see, how long and how many times have we tested? We've tested, many times, one very clear test, or really 2. There's another one, 1, 2, 3, 4, 5. That could be 10 tests right there, multiple rejections. And it's been how many months since we've been below? Well, That was August, so 3-4 months, and that's really going to validate that very strong trend. Now you can see we're coming off that low at 21.91, and all of a sudden we break that 50-day and we start holding above it. All right, and then it tries to, pull back, but now we can see the 50 days acting as a support level. So when it comes to moving averages, in this case, what was once resistance has now flipped, and now that moving average is acting as a support level. And now you can see we've broken these highs, previous highs, some smaller areas of resistance. Now we can just look for a clean breakout of kind of this area, I'd say, and play that back up into 25.96. So yeah, if we essentially see a break above that high, we would really like to see a break. We've already seen a break above 25.01. Now we're kind of choppy in this area, trading in a bit of a range, kind of working our way to the downside. 180 days right there. Let's keep in mind. I would like to see a nice break above the 180 day and outside of this kind of chop. So realistically, 25.34. We want to be clear out of this area to then play a move to 25.96. It is too choppy, I'd say right now, just because we have been kind of trading in a range for the last week or so and not really making much ground to the upside, I would stay away from this one.
Okay.
So you have to be really extremely picky. And that's why, some days I just won't take a trade because there's just nothing. I can't, even within the 4 setups that I trade, I can't identify anything. Or one chart is very close, to being at the point where I want to enter. So at this point, I feel like you have a pretty good understanding of the breakup pattern setup. Do you want a checklist as far as what we're looking for?
Yeah.
You think that would be helpful?
That would be helpful.
You guys should be taking notes alongside Josh because I know there's a lot that we're covering, a lot we're going over. And so just don't get overwhelmed and definitely watch this multiple times if you have to. Number 1 is going to be the trend. That's the first box, I guess I'd say you have to check. So
downward trend, bearish.
You're looking for a bearish trend. The idea behind the setup is that the trend is shifting from bearish to bullish. So we look at the overall trend. I would say the next box is just moving averages. And you've seen in most cases it's the 50-day, but either the 50 or the 180-day SMA respected.
Break above.
That's the thing. So if you're looking at this chart, and I think this is not a good example because the intention here would be, I'm short, but if let's say I'm totally wrong, I was looking to play a breakup pattern. I would wait until we broke above, in this case, this area of resistance at 98.86, the 50-day, and this previous resistance around 102.40, right? Once we broke all of those areas of resistance, I'd look to play and move back up to this next clear resistance.
Okay.
Let's find, an example of a breakup pattern. So in this case, I think we would use the 180-day as a sign of a breakup pattern plus a previous resistance area. So it looks like that resistance level has been broken. This resistance level is sitting above head, and then this resistance level. So I'd like to see a break above the 180-day and a break above 1,132.53, and then play that move back up to 1,213. Does that make sense? So as far as a checklist, I guess what you're looking to check off to be able to take that trade is, I guess the first thing is finding a clean and clear chart. That's step 1 is a clean and clear chart. More than likely we'll be coming off that all-time low. We want to see that moving averages are being respected, either the 50 or the 180-day SMA. And then, some of the setups are more set in stone than others. This one, you don't necessarily need everything to line up, be able to check every single box off. And we haven't even gotten into risk management, where you're then going to realize, like, even though this setup looks great and these levels are very clear and I know exactly where I'm going to get in and get out, the risk reward is not there. Like, the risk reward isn't even worth me taking this trade because of whatever the reason may be, right? That's why the most important thing in the beginning is to understand, like, how to, look at a chart and do your TA. So again, trend good, bearish to bullish is the idea. We're looking to see a break of that pattern of lower highs. So we want to chart out those lower highs essentially. So charting out those resistance levels.
Okay.
And then as we break out of that resistance level, we're looking for that break of pattern, wherever you define that pattern to be broken, essentially. So whether you're defining that pattern to be broken at the 50-day, whether you're defining that pattern to be broken at a key level or area of resistance when it comes to the candles, more than likely the case is when I've traded this, I'm looking for both break above a moving average, more than likely the 50-day, and then a break above a strong level of previous resistance. Once we get that breakout, then we've, obviously got that confirmation to enter, that signal that we've broken this pattern of lower highs, we've broken this bearish trend, and now we're shifting to, a bullish trend.
Okay.
And then we're going to play that move back up to that next high, wherever that may be, that next area of resistance, and then using an area of support below as our stop loss. So this setup specifically sometimes can be harder to find that area where you're going to be wrong, where you're going to set your stop loss, but it's normally very clear where you're going to set your take profit, because it'll be at that next clear area of resistance, which again, you preferably want less tests of.
Yeah.
Let's see. So what do you have?
Okay, so we have bearish trend to bullish. So that's like that reverse of the bearish trend.
Yeah. I mean, in a way, like, this is a reversal as well.
And then just clean, clear chart. Moving averages are respected in the past, and then also charting out the resistance levels. And then finding a less respected resistance level for your TP.
Finding that next level of resistance for your take profit.
Okay.
So the next level, your take profit is going to be identified at that next area of resistance overhead. And then your support, we're going to set your stop loss at support. And when we get into trading these setups, we'll get into the trade management and actually doing so, but just generally know that your stop loss is set at support. Okay, so that is going to cover the breakup pattern. I feel like that's everything you need to know right now, and now it's really just going to be rinse, repeat, and continue practicing this setup. All right, so now that we have covered one of my bullish setups, the breakup pattern, we're going to go ahead and cover one of the bearish setups, specifically my pullback play setup with inside my playbook. Now, my playbook being these 4 setups that I'm currently trading. Now, because this would be a 3-hour video if we did go about covering all 4 setups, we decided just to give you 2 setups, a bullish and a bearish setup. So no matter what the market condition is like, you'll still be able to trade and do well. Josh is actually going to take the master class. He's going to watch the other 2 videos covering the ATL, or the all-time low bounce, so the ATL bounce, and the ATH all-time high pullback. So the ATH pullback, you're going to take those this week on your own. This is inside my mentorship group, this master class with my entire curriculum for my students. Again, if you guys are interested in my mentorship group, the first link will be in the description below. So you'll have access to this entire curriculum. Sweet. Let's pull up some examples of a pullback play and talk about what this pullback play setup actually is. All right. Now, this is actually the current trade that I'm in right now on ticker symbol we're back on ILMN. So what we're looking for when it comes to the pullback play is, and this is very almost similar, and you mentioned this while we weren't recording, but this is similar to the breakup pattern. It's kind of like the opposite of a breakup pattern. So we're looking to find a chart that presents a bearish trend. Okay, we're looking for either the 180-day or the 50-day SMA to be respected. If not both, then one of those moving averages. And then we're looking for that pattern of lower highs and lower lows. We're looking for a recent low on the 4 hours, so that all-time low to just have been formed. So within the last couple of weeks, we're looking for that all-time low. You can see at 89 in this case to have been formed on whatever chart we're going to be looking at. So the intention is to continue playing the overall direction, playing this trend, playing this pattern that has developed. Okay, for example, you can see we pulled back, okay, formed a lower low, pushed, rejected, in this case at the 50-day SMA, lower high, pulled back, lower low, pushed, lower high, rejected at the 50-day. We're looking to just continue playing this pattern, considering the overall trend. We're playing the direction of the trend. You know what playing the direction of a trend means versus like playing against the direction of a trend?
Like hoping it continues along the same way. Like, so if it's resisting and it bounces down, then when it goes to, I don't know.
So the trend, say it's a bullish trend.
Yeah.
Think about it like this. Okay, so in this case, ILMN, the overall direction is bearish and we are buying puts. The setup is to short a bearish chart. It's not going long on a bearish chart.
Okay. That would be a breakup pattern. No.
Don't
say that.
The idea with, that's okay. The idea with the breakup pattern is that we're identifying a break of that bearish pattern into a bullish pattern, and then we are playing the new trend, which is bullish, which means we're betting on the stock to go up.
Okay.
Does that make sense?
Yeah.
So that is the difference between playing or trading the direction of the trend, trading with the trend, or trading against the trend. Because trading against the trend would mean that we get in this stock, for example, same stock we're looking at right now. Playing against the trend here would just be betting on the direction of the stock to go up before we get any confirmation of a reversal. Okay, before we get that breakup. Does that make sense?
Yeah.
So, you know, we're looking again for all these kind of boxes to be checked. We're identifying resistance overhead, which is where we're going to set our stop loss. With this pullback play setup, we're looking for a pullback down to that all-time low. Okay. Again, the cleaner and the clearer the chart, easier it's going to be to identify these levels, where we're going to be right, when we're going to be wrong. So yeah, the intention here, just knowing that we've got some resistance overhead in this 98.86 area. Okay, looking at the candles, we obviously have the 50-day SMA, which has been trailing, obviously acting as resistance, several tests. And then we're looking for a pullback down to that low at 89, just keeping an eye on, obviously, the support level here at 92.27. So stop loss, okay, is set here at 98.86. I'm in this trade right now. And then we've got resistance overhead at the 50-day. And then my take profit is at 89, okay? Keeping an eye on that support below. I'll actually give you some examples of trades I've actually taken so far this year over inside the mentorship group. All right, so here's an example of a pullback play. Okay, I shorted ticker symbol DG. Now I know this is a little small, but this is just a screenshot. Tell me, what do you see here? You gotta get really close.
Let me look. Okay, so hit the 107. Is this where you bought in?
So this screenshot is when I entered. So this was like the time of entry right now.
Okay, so you entered right there.
I entered right here, yeah.
So right when it's about to hit the 50-day.
Yep.
Correct?
Yep, right
and
here.
Then you'll take profit down at the 101.69.
Yep. Okay, so
And
looking
your stop
at...
loss is at the
Yep.
107.89.
Yep, exactly.
Sorry, I don't know if you can hear me in this mic. I was talking over here, but
No, you're good. You're good. So you could see, obviously, overall trend, bearish, right? Lower lows, lower highs, 50-day, okay, acting as a level of resistance. We obviously had a lot of chop back here, but looking at the immediate trend, we can see that, you know, we have been trading below the 50-day. We have been trading below the 15-day. And then, you know, we did break back above the 15-day. As I said, 15-day is probably the last moving average that I'll ever use when it comes to my trading. But occasionally I will use the 15-day as, like I said, a trade management moving average. Really, what I was looking at here was the overall trend, obviously, you know, just the direction, the clear pattern of lower highs, lower lows, obviously taking into consideration the 50-day being overhead, rejections at the 50-day, 1, 2, 3 rejections. And then you can see that all-time low we just formed the day, you know, before I entered this position at 101.69, like you said. And then you can see that resistance level at overhead at 107.89. I would say 2 to 3 tests, definitely a area of resistance that I could identify. That was the next clear area of resistance overhead, right? And then we got the 50-day as well. So I kind of explained that. Obviously, I ended up buying that position. I got in that position, posted the broker fill right there. And then you could see this was 2 days later. I ended up getting out of this position for, like I said, 15.43%. That was obviously the percentage that I was shooting for as far as the profit. So profit target was 15%. I made 15.43%. And then you can see the chart obviously playing out exactly as we predicted. You could see we just pulled back down right into that low at 101.69. If I look on the 1 minute, look at that. 101.69, 101.71, boom. I hit that right there, and then I got out of that position. And then there's a broker fill. Great example of a pullback play. I think I'm at around 85% or 81.25% on this pullback play setup right now. So let's see if we can find another example here.
2,000 years later.
Looks like you found one, a pullback play on ticker symbol SMC. Break this down. Let's zoom out. I want a little breakdown from you. Ooh, it looks good. I like it.
Back in July? Resistance, resistance, resistance. And it was following the 15-day as well.
Yeah, 15 days come into play a couple times.
And then there's a little bit of, what do you call that when it breaks through?
Just where the market like probes the level.
Probes, yeah, that's the word I was looking for.
Yep.
Probed again right here, and then but it was right along the 50-day. So if you're down by 49.49, and then we're trading at probably like right there. So you take your
That's a safe bet.
stop loss.
Yeah, obviously there's more than likely, just to, give you a sense, go to drawings and we can kind of chart out the margin for profit and the area to your stop loss. And again, 3 to 5% is kind of a rule of thumb. So there you go, 5%, 7%. So just knowing the risk reward behind this trade might not be great.
Right? Yeah, because
there's
the percentage is more,
downside presented on the chart. But otherwise, it's kind of hard to identify a clear level at which you'd get out, which you'd be like, all right, I'm definitely wrong here. Just looking at, the very kind of tight range, you could see there wasn't much movement, probably an average of 0.20% covered within the day there. So you just got to keep that in mind. If a stock's only moving 0.5% versus when a stock's moving 5% in a day on average, that's obviously going to have to come into account into your trade plan, right? And just setting realistic targets. Let's put it this way. If you look at a chart and you see the average daily movement on a stock is 0.5%, yet you've set your take profit or stop loss 10% above or below, right? Where you're currently trading, and your average hold period is 3 to 5 days. So from when you get out of the trade, it's 3 to 5 days. Then that's setting an unrealistic target, right? Because that stock might not have moved 10% within 4 months. So why do you think that stock's going to move, 10% in 3 to 5 days? So a lot of setting up your trade plan comes down to just setting those realistic targets. It really does. This chart definitely does present a pullback play setup. However, the margin for profit just might not be there. And that stuff we'll get into later on in the series. Let's find like one more example of a pullback play. And then I'm going to have you dive into the masterclass and go over the next 2 setups on your own in this next week.
All right.
Let's do it. You found one?
I think so. So BMI.
Okay.
Or BMY. Resistance. Resistance.
Yep.
Broke through a little bit there, though.
It did. I would say the 50-day is not acting as a resistance area. Obviously, the 180-day is definitely, but it's trading so far above where we currently are right now that it's definitely not an area where you'd set your stop loss. However, I do definitely see this pattern of lower highs, lower lows continuing to play out. And I definitely think we could see a move back down to that low at 48.12. If you want to zoom in, go about setting your obviously support level there at that all-time low. And then I want you to set where you think you'd go about setting your stop loss.
Take profit, 48.12.
Okay.
Right there. Stop loss with the resistance at 49.88.
I like that. And that lines up with the 50-day, which is good. But just know the 50-day is trailing, like it's a moving average, so it won't stay there, unlike, obviously, the candlesticks. So I like that. What's your margin for profit? And then how far are we from your stop loss? And that'll kind of give you a sense if you want to like look into the trade further.
Only like 1.6% and then 1.9%.
Okay. All right. Well, I think still I would look into this and see, when it comes to simulating out this position, figuring out what the risk reward would be. We're still a couple weeks out from that, but not bad.
All right.
Okay. So your homework is essentially go back over both of the setups that we covered today, right? the breakup pattern and the pullback play. I want you to go through many more charts, as many as you can. Again, the more practice, you're just going to build up that confidence. This will become very second nature. You'll become very fast at, looking at a chart, being able to identify these setups. I want you to watch the other 2 videos in the master class and go over the ATL bounce and the ATH pullback. So those are 2 of my setups that I've done very well on this year. When we meet next time, you'll have a pretty good foundation, and then we can really progress on to the next part of this process. Does that sound good?
Sounds like a plan.
All right.
Let's get it.
Awesome. All right. Again, if you guys are interested in learning how to become a consistently profitable trader, I did put together a mentorship group. All of the information covering what is included in my mentorship group is over on my website. So all you have to do is click the first link in the description below and check that out and apply if you are interested. So hope you guys are enjoying this series so far. Don't forget to subscribe, smash that like button, and drop a comment if you have any questions. Anyway, with that said, we will see you guys all in next week's video. Later.